Welcome to Mark Arnold's Finance. Today I want to help you find undervalued opportunities by using this specific tool that many analysts use, a lot of value investors use. I started researching this about a year ago, and it's something that I use as a benchmark for determining if any stocks that I'm interested in are presenting an opportunity or not, and something that I think is vital to investors to consider at the very least. So that's what we'll be talking about here in just a second. Of course, first, I just want to show you briefly my portfolio performance. I just did a video on my year-end performance, so I'm not going to go into detail, but I'm about 6% in the red. That's about $2,900 of unrealized loss. My goal is to turn this -6 into a +6 next year, so that's 12% growth. I think I can do that. But let's get into this video. The tool that I want to share with you guys that analysts use to determine if stocks are undervalued and presenting an opportunity is called intrinsic value. And this is a measure of what an asset is worth that is arrived by at a means of objective calculation or complex financial model, rather than using the currently trading market price of that asset. So there are various ways to calculate the intrinsic or true value. They consider this the true value of a stock. The most popular way is to use a discounted cash flow analysis. Now, the intrinsic value is a core concept that value investors use to uncover hidden investment opportunities. And when an asset's market price is below the intrinsic value, it may be a smart investment. So the discounted cash flow, the one thing that is mainly used by analysts for this tool to find the intrinsic value, discounted cash flows is a valuation method used to estimate the value of an investment based on its expected future cash flows. Discounted cash flow analysis attempts to figure out the value of an investment today based on projections of how much money it will generate in the future. So when you're looking at sources or calculating yourself, many sources that you look at might use different years into the future. Basically, they might look at 5 years into the future or 10 years into the future. So that's something you want to consider when researching which source you want to pull from to get that intrinsic value. Their discounted cash flow model, is it going out that 5 or 10 years? So typically, investors try to also use both qualitative and quantitative factors to measure the intrinsic value of a company. But investors should keep in mind, all the results and all the intrinsic values that you will look at are all estimates. There's no way to find the actual true value, but I think this is the best way to be close to finding that true value. So qualitative factors are such things as business model, governance, and target markets, items specific to what the business does. Where quantitative factors refer to financial performance, financial ratios, financial statement analysis, so on and so forth. There's also perceptual factors, which refers to an investor's perceptions of the relative worth of an asset. And generally speaking, intrinsic value can be considered to be how much the business is worth as determined by selling the whole business and its assets. So this is definitely trying to find that true value, and I think it's a great way to determine if a stock is over or undervalued. So another measurement that analysts consider when calculating intrinsic value is the market risk. Risk, I think, is something you need to put into everything you look at. So a market risk element is also estimated in many valuation models. For stocks, the risk is measured by beta, and this is an estimation of how much the stock price could fluctuate or its volatility. So a beta of 1 is considered neutral or correlated with the overall market. A beta greater than 1 means a stock has an increased risk of volatility, while a beta of less than 1 means it has less risk than the overall market. So if a stock has a high beta, there should be greater return from the cash flows to compensate for the increased risks as compared to an investment with a low beta. So always factor in that risk. Now, there's market value, there's intrinsic value. Market value equates to the current price of a particular asset. For example, Walmart might be trading for $200 one day and $220 the next day. It's variable, where the intrinsic value is the true value of the company, and it's determined by using the valuation model. And so market value is determined by what people are willing to buy an asset for, and it's based on many different reasons, and this might include someone's financial needs, short-term trading goals, and trading impulses. On the other hand, intrinsic value measures the value of an investment based on specific information about it, such as its cash flows and its actual financial performance. So intrinsic value, the bottom line, you need to know how this is calculated, and especially from what source you're pulling from, how that's calculated, because you're going to find different sources calculate their intrinsic values in different ways, and you want to pull the one that you think best represents how you are investing, your strategies, and your outlook. And value investors in particular seek to know intrinsic value because it helps them understand whether an investment is appropriately priced according to their investing approach. Since knowing intrinsic value is considered fundamental to analyzing securities, it's good for investors to understand how to calculate it. Knowledge is power. And where I pull my source from, I have looked at how it is calculated and I like how it's used. And I think it's a great method for trying to find the true value of a stock, therefore if it's under or overvalued based on its current market price. So what I'm going to do now is go through 12 stocks, share the intrinsic value, its current stock price, whether it's over or undervalued, and maybe a few extra notes. So I want to start with 3M. Now 3M is a popular dividend stock. Its intrinsic value right now is considered $154. Its current stock price is $120. So it is now considered undervalued based on the intrinsic value from the source I pulled, which I can't share the source right now. I'd have to ask permission, but maybe that's something I can do if you're interested. I also want to mention, aside from the intrinsic value, there's also something called the target buy price based on required margin of safety. So this is where you factor in that volatility, I feel, and the risk. So its true value, its intrinsic value of 3M might be 154, but you might want to put that margin of safety in and say, I'll be willing to buy at 119 or below. So keep that in mind as we go through these. There's the intrinsic value, and then you might want to add a level of safety, a margin of safety. McDonald's right now, its intrinsic value is $187. Its current stock price is $264. Therefore, it's considered overvalued. Chevron, its intrinsic value is $201. Its current stock price is $179. It actually is undervalued right now. Apple, this is a popular one. I think with its stock price going down, a lot of people are looking at it. Its intrinsic value is considered 120. Its current stock price is 130. So it is overvalued. But with Apple, I think their cash flows are such of high quality, I'd be willing to buy in at that intrinsic value or below. So if it hits below at 120 or below, I will be adding a position to Apple. I've already decided that. IBM, its intrinsic value is $134. Its current stock price is $140. So it is slightly overvalued. This is a very popular stock as well with investors, I see, as well as Intel. Intel's intrinsic value is $37. Its current stock price is $26. So this one is considered undervalued right now, which a lot of people I see out there are buying heavily. Microsoft, this is my biggest holding. I'm very bullish on Microsoft. Its intrinsic value is $216. Its current stock price is $240, which is about my average. So it is considered overvalued. But with Microsoft, not only is this probably calculated based on 10 years of a discounted cash flow model, but I'm going to hold this one for most likely the rest of my life. So I'm okay with the 240 average I have. And if this dips below 216, I will finish my position with Microsoft. I'm wanting to get this up to 10,000. At that point, I would finish it off and then just hold Microsoft basically forever. Coca-Cola, another holding of mine. This, of course, is in the consumer staples sector. So in this economy, this is a very popular stock to hold. And its intrinsic value is $39. Its current stock price is $63. So it's definitely overvalued and makes sense with the economy that we are having right now. So its rival Pepsi, its intrinsic value is $137. Its current stock price is $181. So it is considered overvalued. Walmart, its intrinsic value is $117. Its current stock price is $142. And it's overvalued, and that makes sense as well with the economy. Everyone is going and purchasing at Walmart, and investors are definitely pricing in that popularity right now. Target, this has been a very volatile stock this year. Its intrinsic value is $131. Its current stock price is $149. So it's actually overvalued right now. I see some people say it's undervalued, but I do agree that it's overvalued. And Target, to me, I don't think I'll ever invest in this company for several reasons. Maybe I'll do a video someday, but it's not a stock pick of mine. Home Depot, the last one. This is a stock I hold. I am bullish on this stock. Right now, its intrinsic value is $271. Its current stock price is $316. My average is in the 290s. So it is overvalued. And for this one, I think I need to add a margin of safety because it is highly leveraged. It has a lot of liabilities. And so I'd be willing to buy in more into Home Depot if it drops below $265. So there you have it. Of all these companies, there's only 3 that are undervalued and presenting an opportunity. That's 3M, that's Chevron, and that's Intel. The rest are considered overvalued. And so this is just showing an example of me as an investor and how I use the intrinsic value from the source I pull. I look at its intrinsic value, I see if I want to add a margin of safety, and I determine the stock price I want to buy in. And I think it's a great tool for you guys to use as well, especially as value investors. We want to get good deals. We don't want to buy in at overpriced levels. We want to get in at those undervalued levels to provide more potential for growth in the future, right? We're in this to become wealthy, and I think this is a great tool. So I'd like to know, do you guys consider intrinsic values when you're investing? If not, is this video going to maybe start you looking into it and considering them? Because I think it really is a great tool to use. It really, I think it's close to the true value. Of course, nobody can estimate that or get it perfect, but I think this gets pretty close. And I think the intrinsic value is an excellent one to use. So with that said, be sure to subscribe if you like this content, and I appreciate you guys being a part of my channel, and we'll see you very soon on Mark Arnold's Finance. Have a great day.